Hi, good morning, techies and scientists. Welcome to the channel. This is another weekend review and providing some prognostication for next week. Again, try to figure out where we're coming from and where we're going. Now I'm showing my screen about some of those government data that were delayed, and we all know why they were delayed is because of a government shutdown. It's been about 18 days now. Today is October 19. What we are seeing here for the jobless claims, all this data has been delayed. So we are not getting the data that we need. So that's why the market feels like it's been on a holding pattern. Let's look into next week, see what we have. So we do have a couple of newsworthy events coming up next week. We have a jobless claim on Thursday, nothing on Monday, quiet on Tuesday. And on Wednesday, we do have the EIA Petroleum. Let me see, Wednesday, EIA Petroleum coming up. I'm looking at the different calendar events, right? Because I have many of them. I invested into a calendar day, but the physical document, so I can take a look at it. So that's where we are right now. Let's see. And then on Friday, we do have a new home sales data. So it's not going to be a very spectacular week, but we may still see some movement. The following week, however, on the 29th, we will probably get a whole lot of things going on the 29th of Wednesday. Not this week, but the following week. And we will see a lot of volatility around that time. And this will be an opportunity to see price go either way. But we'll take a look at that when we get there. And this is another website also look into, which is called Forex Factory, and kind of condense everything what I just talked about. So Monday, not a whole lot going on. We have FOMC speakers speaking. We have at 10:30 a.m. some inventories coming up. Those are not newsworthy, but they're just data information available. And then on Friday, we have flash PMI at 9:45, and we have new home sales. And I believe if the government shutdown prolongs, we will still have all this data being delayed, and it's not going to help us much. And if we go past this month, the government being shut down, this will probably set a new record for things. So we'll monitor the situations there. All right, let's dive into the charts. Let's take a look at the daily first, which is going to be on the upper left hand side. Then we'll dive into the upper right hand side for the 15 minutes. Okay. So on the daily, we just like I mentioned the week before on Sunday, before the market opened, I knew after the market dropped for so much, the higher probability that it will gap up, and eventually it did gap up. So we had a lot of concentrated movements here on the daily. So it's a lot of back and forth. So when you have a new week opening gap like this, you always need to pay attention to it and kind of like grade it using your Fibonacci. What happened is it gapped up and then opened on Monday, went up into a daily, into one of those daily gap here, and went back lower, dip into the gap, back up again. Make sure I can highlight this. And then open, went down, did not quite get into the gap, but there's a lot of back and forth movement, as you can see here. If you look at on this side, so it was quite a bit of a back and forth. And then we have Friday. I believe that was Friday. Yep. Friday it opened up from the bottom, went up, and it was keep surging up. And during London session, we made a new low during the London session here, right at about 3:34 a.m., which makes sense. A dip into that a new wick opening gap, and then it just keeps surging higher and higher. So we have, if we take a look at the 1 hour or maybe the daily, we see that it dips twice into the gap. And the second time that it dipped lower, but it stayed above that 50% of the gap right here, which is telling us that there's a bullish signal here. Also, now this is the time where we do the prognostication. Now we also want to take a look at what is going on overall. So the market is in the range, and the range we're talking about is from that October 9th all the way to that Friday when it dropped on Friday the 10th. So we have a gap, and I use a Fibonacci to grade that the entire range. That's a gap? Nah, it's mostly range. So if we are taking a look at this from a high level perspective, we see that price spend quite a bit of time in the 50%, which is what I always say. When you see price going back and forth like this, it's usually in the 50% range. And that's a good prognostication that you are probably grading it correctly. So what do we see here? So we see at the bottom 25% here, there are no bodies there. It's just wicks. No quick sudden reaction on the daily. Even if you look at it on the hourly, there's a little bit of a body here, but it's just one, two, three, four bodies and then surging back up. What I'm anticipating is that into next week, or maybe when the market open, there's two possible scenarios as always. It's either going to gap down and retrace lower to the 24,846 level, and then over the London session, and then by the time we open up on Monday, on the regular trading hours on Monday, we'll start going back up, and reach that new high at 25,160. So to me, I think these two levels are what's at play here, depending on which one you reach first. To me, if market opens up, in a couple hours on Sunday, and then price keep going up, and what I'm anticipating is it will probably reach 25,160, and then will trace lower to 24,846. That's one scenario. But if price open up and then it start retracing lower, I'm anticipating it will retrace lower to the 24,846 area, and then it may wick into 776, but it will not leave a body there, and then it'll just keep going up and up. So that's what I'm anticipating to see. So to me, the areas of importance is 24. I would say 24,776 and 24,160, depending on where we are. This is what I'm anticipating to be. Usually when you have a quiet week like this, it's either there will be some news announcement, especially with the Magnificent Seven. So we do have a report on Tesla is going to report on the 22nd. So that will be on the Wednesday 22nd. And let me check the time here. It's around 5:30 p.m. So I will watch out for that. What you usually see, the market will go quiet for a little bit, and then right at around 4:05, 4:15, you'll see the market jerk around twice, and then move around quite a bit. And even the following week after Tesla reporting on the 22nd, and then the following week on Wednesday, we have Meta, Google, Microsoft, and they're all reporting their quarterly earnings. And then on Thursday, we have Apple and Amazon. So this week, the week of 26, there's going to be quite a bit of action. Okay. So I will be careful with that. And I also believe, it's either the 28th or the 29th of October, it will be the 96th birthday since the stock market crashed in 1929. So the following week, it's a big event, so I would be really careful. I will try not to over leverage, and if you suffer some losses, just tuck your tail and be nice that you can preserve your account. So be very careful with especially the following weeks. But this week, there might be some action, but nothing spectacular. There's not a lot of newsworthy events. Let us take a look at where we are as far as seasonal tendencies. When it comes to seasonal tendencies, right around, I would say, October 10th, where we see the major drop here, there's also that low on the seasonal tendency that were created. So that was right on par, right on business. It came in a little bit, maybe a day later, but same business here. So what I'm anticipating is if we're following the seasonal tendencies, based on what's going on the 29, on the 20th, on the 29, I'm expecting a lot of price action that things will just spike up. Also, just to add that in, so yeah, there's a lot going on here. So this is like an inside day trade. So meaning you have all this big candle, and then you have all these candles inside that range. So whenever it's coming out of that range, it's gonna come out with a bang. It's either gonna, if it's going up, it's gonna be really going up with a lot of energy, or if it's going down with a lot of energy. So that's why I say, be careful. What we see here, we may end up seeing the opposite of it, or we may see a continuation lower. So trade likely, be careful, don't over leverage. And you can see here, right? So there's an inside day. There's a possibility we may see like a big run up based on the seasonal tendencies. And this is looking back 20 years, guys. So this is kind of like, this is like a good roadmap to use. So this is my prognostication here for next week. I'm anticipating that there might be a slight retracement lower, like I mentioned earlier, a little bit of retracement, and then after that, it'll keep going up to 25 and 160. Maybe take a little dip and then just keep going higher, higher and higher. Quit melt up. That's all. That's all I have for you guys. Enjoy. Happy